Hi, everybody. Today is June 23rd, 2013. This is very serious because China could call in its debt that the U.S. owes it. And desperate people do desperate things, as do desperate governments. China breaks silence on cash crunch. The People's Bank of China allowed the nation's leader to approach crisis point this week as part of a crackdown on shadow finance, the government has indicated. Leading banks in China ground to a near halt last week as the PBOC, China's central bank, refused to pump more cash into the economy, causing interbank borrowing rates to spike as 25 points, or PC. The cash crunch stoked concerns that certain financial assets which rely on interbank lending market for funding were on the brink of a mass default which could have triggered a Lehman-style crisis. But most onlookers suspected that the PBOC was simply sending a stern message to the country's commercial banks and would step in prior to an all-out crisis. These suspicions were confirmed by the state news agency on Sunday in a thinly veiled warning that the country's banks cannot continue to frustrate the bank's efforts to boost the economy by funneling new liquidity into the shadow banking activities and away from the real economy. Xinhua, which acts as a mouthpiece for the Chinese government, said there was ample liquidity in China, and the latest spike in interbanking lending rates was due to market distortions caused by widespread speculative trading and shadow financing. It said data showed a broad M2 money supply rose 15.8 PC in May from a year earlier, and a total social financing aggregate, a broad measure of liquidity in the economy, was more than 1 trillion yen. The banks are short on cash, the stock market, and small and medium-sized enterprises are short on cash. But there is ample money supply in the market, it said. Many large companies are still spending heavily and making large purchases in wealth management products. There is also a lot of hot money seeking speculative investments, and private lending is still widespread. These factors show the liquidity crunch is not caused by a shortage of funds, but by structural issues that keep money from reaching the real economy, it said. On Sunday, the PBOC reiterated that it was not committed to prudent monetary policy and moderate credit growth, vowing to improve liquidity management so money will better serve the real economy. Overall financing in the Chinese economy increased 52 PC in the first 5 months of 2013 from the corresponding period last year, which analysts say has led by a surge in shadow banking activities and wealth management products that promised investors high returns. The central bank's refusal to inject cash into the system, despite a spike in short-term lending rates, suggests that its monetary policy has begun to shift from one focusing on quantity to quantity of market liquidity, Xinhua said. China's cabinet has vowed to ensure credit growth supports the real economy and to control the flow of new money into industry struggling with overcapacity. So last week they almost had a crash. They're not going to continue this without doing something drastic. I don't know. They're not going to stop it. It's going to happen. All right, bookmark my site. I'll keep you up to date. Please stay safe, and I'll talk to you later. God bless you all. Bye.